It's Tuesday, the 12th of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
The east coast of Australia shifts to an easing of COVID restrictions and hints that state borders are about to open. That's our main story. Also this morning, the local IPO market set for a record. Star Entertainment's share price tumbles 23%. And claims JobKeeper wasted more than $26 billion. Then stay listening for Sean's chat to James Wagg from Quartermentha about whether Australia is about to be hit by a wave of insolvencies. But first, Sean, it was a big day yesterday on the COVID front with lockdowns ending and hints of borders reopening. What happened?
It was pretty exciting all around, I think, Michael. A red-letter day for the east coast of Australia. New South Wales came out of strict lockdown, with retailers and bars and venues reporting plenty of traffic. Victoria said it was on track to reopen within weeks and will allow all citizens to access Pfizer and Moderna vaccines. That's good news. Queensland indicated it will open to other states and the rest of the world, in fact, in about 5 weeks' time. And as a result, everyone in the state needs to get vaccinated. And the ACT said it was on track to open up again on Friday. Now, first to New South Wales, it was a very busy day with queues around retail outlets in Sydney, from bars to barbers. And the state government said it was pushing to reopen international borders in coming weeks. All that came as Fiji said it will reopen to fully vaccinated Australians with no quarantine. Undoubtedly, the mood in New South Wales and Greater Sydney yesterday was as good as it's been in 16 weeks, which, of course, was the last time the city was open.
Yeah, absolutely. You mentioned Victoria and the fact that it's on track to reopen within weeks. The state still looks pretty problematic, though, in terms of case numbers.
Sure does. Another 1,612 cases and 8 deaths yesterday, more than 3 times the number in New South Wales. But the Daniel Andrews government continues to talk up reopening. Its full vaccination rate is now 59%. And it's creeping towards that 70%. Hopefully, that will be reached by the end of this month. Meanwhile, Mr Andrews and the New South Wales Premier, Dominic Perrottet, have agreed to rethink the border closure between the two states when the current peak in Victoria is over. Also, the ACT recorded 32 new cases yesterday. And Michael, contrary to what I said over the weekend, I'd hate to admit that I'm wrong, the ACT will reopen on Friday with a full vaccination rate currently standing at more than 71%.
Yeah, great news for Canberra. It does feel like everything's happening quite quickly now. It's going to be interesting to see how it plays out.
It will. More than 82% of adult Australians have now had their first dose of vaccine, and almost 63% are fully vaccinated. But there will be a real spike in cases when borders reopen, when cities come out of lockdowns, and governments and the public will have to hold their collective nerves to see this through.
Yeah, you're right there. So, Sean, how did markets perform then over the past 24 hours?
Well, the S&P ASX 200 closed down 0.3% to 7,300 points even. Energy and materials companies rose while technology stocks and consumer discretionary companies fell. They're the ones, of course, that did best during the COVID times. Among the large caps yesterday, Afterpay and Xero were down around 4%, while Aristocrat Leisure, Telstra, Wesfarmers and CSL all dropped more than 1%. The big miners have had a really good run the last few sessions. Fortescue Metals was up more than 5%. Rio Tinto and BHP also outperformed, while Whitehaven Coal was the best performer on the bourse, up more than 5%. And Michael, it's been a cracking year for initial public offerings. Figures were out yesterday from Refinitiv showing that 121 companies have debuted on the share market this year so far. Now, that's the best since 2007. In that year, there were 136 listings, but of course, we've still got 2.5 months to go. So we're likely to hit a record. Now, a couple of big offerings are coming up in the next few weeks. US fund manager GQG Partners will list. That'll be worth about $1.3 billion. So too will Judo Bank, and that will be worth around $650 million.
And there's been some talk, Sean, about the price of oil. Where's that heading?
Well, one of our faves on Fear and Greed, ANZ's Daniel Hines, yesterday came out and said that given the current volatility, you couldn't rule out $100 a barrel for Brent crude at some point in the future. But Daniel thinks it could hit that $100 mark. Now, combined with the Aussie dollar, which is trading around 73 US cents at the moment, it's why you're starting to see some very expensive petrol around the place.
Yeah, just in time for cities to start opening up and people to start moving around again. Perfect timing.
Oh, yeah. Very true, very true.
All right, now what's happened on Wall Street overnight?
Certainly high energy prices, particularly oil, is weighing on Wall Street. The key US benchmark, the West Texas Intermediate, hit a 7-year high overnight amid supply fears. In early afternoon trading, the three major indices, that's the S&P 500, the Dow Jones Industrial Average and Nasdaq 100, were all lower. European markets were mixed, though London's FTSE 100 was up sharply.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. Star Entertainment's share price fell 23% yesterday after the allegations in 9 newspapers and on 60 Minutes about suspected money laundering, foreign interference, fraud and organised crime at its New South Wales and Queensland casinos. The market clearly didn't like what they heard.
No, they didn't. Not that too many people are surprised, I suppose. We've spent 2 years watching Crown Entertainment being castigated by inquiries in New South Wales, Victoria and Western Australia about its operations and allegations of money laundering and dealing with organised crime. So it's not really a surprise the other major gaming player in the country is facing similar allegations. Now, they include that the Star board didn't act in 2018 on 2 confidential reports from KPMG detailing faulty anti-money laundering and counter-terrorism financial procedures. The allegations included that the casino ignored red flags on problem gambling and money laundering by key patrons. New South Wales Premier Dominic Perrottet yesterday said the allegations were concerning and he threatened to take appropriate action. Star itself issued a statement saying it was concerned about a number of assertions it considers misleading, though that's not that much of a defence.
No, so what's it mean then for Star moving forward?
Well, it's a bit early to say, but given the fall in share price, investors clearly aren't very happy. It is likely that some sort of inquiry will eventuate, or at least the current state review of the gaming group, which is going on, it's a regular review, may actually become a little more intensive. Star was hoping to expand, and remember they actually talked about a merger with Crown. I'd say that will all slow down or at least go on hold for the time being. And it's just a really bad public relations exercise for a company and an industry which already struggles to win friends.
Yeah, big story. Now, I mentioned at the start of the program today the Federal Treasury's review of the $90 billion JobKeeper program. It found that the program was well targeted and highly effective in maintaining employment and supporting the economy.
True, but around $13 billion of payments went to businesses that recorded increases in revenue during the COVID crisis, and about the same amount went to companies whose turnovers didn't decline by the 30% and 50% benchmarks that were set by the government. Now, a clawback mechanism, which had been called for, wasn't used, and the report said that was to avoid any disincentives for businesses to adapt and recover. The report says JobKeeper saved about 700,000 jobs and kept employers and employees connected.
Now, this was always going to get a bit political, this one, and Labor Shadow Treasurer Jim Chalmers said it was a stunning admission of failure. What do you reckon?
I don't think so. Jim Chalmers is talking his book, obviously. JobKeeper was far from perfect, but it got money to people really quickly. Remember all those lines outside Centrelink when the pandemic hit? They went away very quickly as a result of JobKeeper, and Australia made it through the pandemic remarkably well. The economy held up well, and people didn't lose too much income. So I am actually a fan of JobKeeper.
All right. Now, there was another big corporate takeover yesterday, this time in the petrol business.
Yes, Ampol has agreed to pay $1.9 billion for Z Energy, which is a fuel distributor and service station owner in New Zealand. The Z Energy board has approved the transaction, though it's subject to regulatory approvals. It's an important deal for Ampol, particularly because earlier this year New Zealand closed its last oil refinery and all its fuel is now imported. Now, Ampol refines oil at Lytton in Brisbane. That's because it received a government support package earlier this year, so it kept it going. The oil refiners and distributors need more markets, and this deal in New Zealand helps Ampol.
Now, I know it is only Tuesday, but I have a front runner for my favourite story of the week. It is this one about pump and dump schemes and the corporate watchdog. We've spoken a bit about pump and dump chat rooms and the way these schemes operate. And this is basically where an investor or where a group of investors push a stock hard, and as the price rises, they sell out making a profit. basically leaving everyone else, though, with potentially overpriced stock. The corporate regulator actually joined one of these chat rooms yesterday.
They did, surprising everyone. The Australian Securities and Investments Commission posted a message on the Telegram chat room telling traders they might be breaking the law. I have never heard of that before, and I don't think anyone in the chat room had heard of it before. Reports suggest they didn't think it was actually ASIC, but ASIC later in the day said it was them. They told everyone in the Pump and Dump organisation forum that it could see all the trades, it had access to trader identities, and it warned them of $1 million fines. Unusual tactics for unusual times.
Sean, what's making headlines in today's news media?
The Financial Review is holding an Energy and Climate Summit and is full of stories from the conference. Its main story is about industry leaders demanding more ambitious action from the federal government on climate change, heading into COP26 in Glasgow next month. Another interesting story out of the conference is BHP saying Australia will not have the luxury of ignoring nuclear power as it pushes towards carbon-free electricity. The Fin is also reporting that New South Wales Premier Dominic Perrottet has received advice that Australia needs a surge in immigration, 2 million people in 5 years, to rebuild the economy and address worsening labour shortages. And several media outlets are reporting that Prince Charles, Australia's future king, has urged Scott Morrison and other leaders to attend the UN Climate Change Conference in Glasgow. The Prince was genuinely surprised when told Mr Morrison might not attend.
Running through some of the other stories around today, there's never a bad time to upgrade an earnings outlook, but seldom is there a better time than when you're under takeover offer from competing bids. Now, this happened yesterday with Australian Pharmaceutical Industries, which upped its profit guidance on the back of strong sales through its Priceline pharmacies. API is under offer from both Wesfarmers and Sigma Healthcare at the moment.
Good luck to them. The Commonwealth Bank is facing millions of dollars in fines after the Fair Work Ombudsman claimed Australia's biggest bank and biggest company undertook serious and systemic underpayments of more than 7,400 workers since 2015. The Ombudsman claims that the bank got employees to sign up to individual agreements that undercut union deals. The bank says it has undertaken a comprehensive remediation program and it has substantially made up what was owing.
Now, some very welcome news for South Australia. The future of the Whyalla Steelworks has been secured thanks in part to strong demand and booming steel prices. The operation, which is owned by Sanjeev Gupta's GFG Alliance, has been able to refinance the steelworks in its first major refinancing since the collapse of Greensill Capital. Greensill had previously supplied about $6 billion in finance to the GFG group.
And finally, the Victorian Aged Care Minister Luke Donnellan has resigned from the ministry after allegations of branch stacking just as a corruption inquiry got underway. It came after federal Labor MP Anthony Byrne told the independent broad-based Anti-Corruption Commission in Victoria that he, Mr Donnellan, and former Andrews Government Minister Adam Semurek had paid thousands of dollars in Labor Party membership fees for other people to shore up factional support. Incredible story.
Yeah, absolutely. And what's the key overseas news this morning, Sean?
There's been a few stories out of Japan in recent days about its nuclear industry. Following the Fukushima disaster, which was more than 10 years ago now, the nuclear industry in Japan pretty much went into hibernation. But if the country and its new Prime Minister, Fumio Kishida, wants to achieve aggressive carbon neutrality targets, nuclear needs to be part of the solution. It's a big reason why uranium prices, which is needed in nuclear energy, have run so hard in recent months. They hit 9-year highs in mid-September, though they have come off a bit since then. And Michael, there's a global recovery in the chocolate market. Sales of chocolate and lollies rely heavily on the travel industry, people buying sweet items in duty-free stores and that type of thing. That was hit by COVID-19. But Bloomberg is reporting that cocoa bean processing is up around 6% in North America, Europe and Asia, and demand is likely to grow even more as people travel again.
Up next is the Daily Interview, and today you're speaking to James Wagg from Quartermentha. You actually spoke to him about this time last year, about whether we were going to see a wave of insolvencies.
Which actually never happened. So we're asking the same question this morning, whether or not we can expect a wave of insolvencies as the economy picks up and government support declines.
All right, that's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 12th of October, 2021. Make sure you're following the podcast. Join us online on Twitter, on Facebook and LinkedIn, and sign up for our daily newsletter entirely free at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.